So this is how I caught the majority of the weekly range using the FOMC news release. Okay, so this was the trade. If we just go over to Discord, here's a few screenshots of me talking about this trade. You can go ahead and pause this and you can see sort of my idea or what I was looking at the time of this being posted, which was the 7th of May. And you can see the screenshot here of the trade if you're interested in that. Okay, but let's actually just go ahead and talk about this specific move here. Okay, so first of all, if we just go ahead and look at the economic calendar, okay, we noticed how Monday and Tuesday had very little news. Wednesday was the FOMC statement and press conference, and then towards the back end of the week we had majority of the news. Okay, so based on the weekly chart, and if you watch any of my weekly outlooks, which I post in my Telegram every week, link will be in the description, I often mention where I want to see price go and push to. So I wanted to see this week be a bullish week because we'd taken out equal lows. We'd formed a swing point. This was an engulfing candle forming this order block. And I simply put, just wanted to see the following candle, this one, go ahead and reach higher. Okay, my drawn liquidity was this high because when we are in a buy program, we want to see price make higher highs and higher lows. We want to see bullish arrays being respected, and any run beneath an old low should act as a turtle soup to go higher. Okay, so this week the target was the previous week's high. Okay, the draw, right, where I'm really anticipating price to go over a longer term, was this high here. So the week started off, okay, if I just go ahead and replay the days, the week started off by retracing. Okay, so we can see here, there we go, retracement. In terms of the outlook, okay, I'm vaguely at the time mentioned this FVG that we could come and push into, and what we do is we want to join or combine, okay, the idea of the news releases with, okay, higher time frame period levels. So if I'm anticipating a bullish level, right, essentially what I want to see is a closure above the open, right, or at least a price trading towards the open. Yeah, so let me just change this to weekly open. Let's make the line a bit more so it stands out a bit more. So we've gone ahead, okay, on Wednesday we've gone ahead and tapped the higher time frame level, and we've actually gone ahead and filled it. Okay, so if we think about it, what happened before, okay, we'd gone ahead, we had tapped the area on Tuesday. However, because we have the news release, we're thinking now in our minds, all right, cool, it's possible that this is just a set of equal lows almost to go ahead and get rinsed for during the news release. Now there was a couple other points that we could use to really confirm this, with the fact that YM actually had very clean equal lows and ES also had clean equal lows. Yes, you could have viewed this as SMT, right? That's perfectly understandable. However, based on the context of this move, I believed, cool, the SMT had supplied the move higher here. However, we still have further accumulation to go. The other key point, right, was actually based on a concept I produced a video on, I think it was last week. It was a prior video to this. It's titled this concept has a 95% success rate. And what you'll notice is on, okay, I'm not sure why this is not loading, but what you'll notice is on the candle, let me switch this over to the daily. If we go over to this, right, ignore this gap. I'm not sure why it's showing a gap here. There you go. What you can notice on YM and ES is that the daily candle actually started off by running higher, okay, without any lower wick. So we know, right, if you go ahead and watch that video, that the candlestick or candlesticks in general typically have an upper and a lower wick. So the fact that we don't have one here is just even more evidence that this move higher, which potentially you guys might have went ahead and longed from, this is a low probability area to long from. Not only because of the equal lows, right? Technically speaking, you could have considered SMT, like I said, but the fact that we had no lower wick on the candle meant it was very likely that we were going to go ahead, trade lower before trading higher. Okay, and that's what ultimately gave me the confidence not to attempt any longs inside of this FEG, which is perfectly understandable if you did try and do that. So let's go ahead and play this out. So we allow the day to play, and here we go. Okay, so typically, I think it's one more. Yep. So typically FOMC, okay, is a two-stage delivery, right? We have 7 o'clock. Okay, this is UK time, so if you're in US, I think that's 2 maybe. 5 hours difference. 2 and 3, I think, or 2 and 2:30. Sorry. So the first release will often be the manipulation, and the second release is going to be the move that we're after. So a lot of the time, we don't really want to front run the news release. We want to allow the first half to do its damage and then get in after that damage is done. So if I just jump down to the 15-minute, let's actually see what played out here. So we go ahead, we reach for... Oh no, that's the wrong candle actually, my bad. There we go. So the first 15 minutes goes ahead and reaches for, okay, the liquidity. So after that, price has manipulated, right, during that first news release, essentially, okay? So from there, we want to see displacement higher to say, okay, cool, the low is in. Obviously, we don't want to spend too much time around these higher time frame PEA levels. And yeah, let's essentially see what we do from here. So we go ahead and we form a swing point. Now, typically, I like to wait on hourly closures for my entries, or at least the last 15 minutes, which I do here. But a lot of the time, I like to see a firm hourly closure away from price. In this sense, because we had such high confluence, i.e. we had the news releases, we had the idea of the higher time frame PE rate, the accumulation, the manipulation. There was so many different ideas back in this trade that I was comfortable to enter in and around this level. So I put my entry in, I had my stop, I believe, at this low. And originally I had my TP at the high, right, which is around 3R. I ended up getting out around this level. It was more around a 2.4R, so maybe my entry was a bit worse, like maybe something like this, or a bit lower than that. So let's go ahead and see what that plays out. There we go. So 15-minute candle goes ahead, pushes up. You can see we drop a bit and then we just end up rocketing higher. Okay, so if we actually look at the hourly closures, just to show these off, you could have waited for this hourly closure, right? And you could have just entered after, that's fine, or on the protraction of this hourly candle. Regardless of how you end up playing it, we form a swing point here. Okay, so there's multiple ways to get in, is what I'm trying to say. You either got the entry that I took, which was a little bit premature, which was fine. You've also got the idea of a breaker. You've got the idea that the hourly closed bullish after sweeping so many different lows here. And then also on top of that, on the hourly, we have a market structure shift plus FEG. Okay, so essentially going into the following day, so this day is about to close on the hourly, on the daily time frame. So a new day has formed. So actually, let me go back here. So after the day had closed, right, sweeping liquidity, filling an FEG, and closing bullish, I was looking for the following day to be bullish, right? And to be honest, I was assuming a move in Asia. Right? I thought it was very, very, very likely that we do not just trade around. Like, imagine this, right? We have what? So this is UK time, right? This is London. This is the start of London session. For me to assume that we're not going to move for all this period, it is extremely unlikely, in my opinion. So we literally go ahead, tap the hourly FEG, and we rock it. Okay, and as soon as I sort of get up, I was up really early that day, that I ended up just TPing at this weekly open, catching the majority of that weekly range. Okay, and you can sort of see we don't really go too much further. If I did hold, I would have weathered a bit of drawdown here, and we would have went ahead and ripped the high out, which is fine. But again, it doesn't really change too much. So overall, I've managed to catch sort of the majority of the weekly range. Again, this sort of highlights the importance of the economic calendar and pairing that with higher time frame PE range. You'll notice even with this example, that I haven't done anything fancy here. I've literally had the higher time frame level. We've expected some sort of consolidation. Lows get ran out. And then when it comes to entry, there's a million different ways you can approach it. The hourly closures, the breaker, the market structure shift plus FEG, the swing points, right? There's the entry is, as I always say, it's not that important. The most important part was being patient enough to say, you know what, and don't get me wrong, there are trades within Monday and Tuesday. I'm not going to cover that because that's beyond the scope of this video. But my point, what I'm trying to get at, is called being patient, allowing the major manipulation to happen, and then just getting on side with the move. Yeah, so hopefully you guys have enjoyed that. If you do have any questions, if you do want to ask me anything, go ahead and write your questions in the comments. But yeah, hopefully you guys got a lot of value out of that, and I'll see you like in the next one.